All right, Rick and Price. This is the company cell from the car in the emergency room right before I get rabies shots. So mine's a little outdated, but the information, the general flow of the conversation goes the same. I'm going to do one that I do more for cities, developers, a less of an internal one, meaning I'm not going to focus a lot on the training, the recognition part of it. Good stuff to do, especially in an interview, but I usually do not include that in my conversation with the city. It's just more appropriate for an internal candidate. So I'm going to go page by page, and I'm going to stop after each page just so you know where I'm at. So we're going to start, and how I always start is, hey, tell me a little bit, how much do you know about LGI Homes? Usually they're going to say very little. And I said, great, let me spend 5 or 10 minutes getting you a little bit more up to speed with who LGI Homes is. So starting here, so we'll start on a history of success. Like I said, this one's a little out of date here. So I usually, and I'm always having this facing them, I'm looking at it upside down. So I say history of success. This is really LGI's resume. So LGI was founded in 2003 in a suburb of Houston, Texas called the Woodlands, just north of Houston, Texas. Really, between 2003 and 2010, our entire book of business existed within the boundaries of the state of Texas. In 2011, when we were inquiring about going public, it was evident that we needed to prove our business model outside the state boundaries of Texas. So in 2011, we partnered with a private equity firm out east, and we made our first move outside of Texas into Phoenix, Arizona. And Phoenix, Arizona in 2011 was really the foreclosure armpit capital of the United States. So we really wanted to test ourselves and test our business model. The story goes, we bought just over 100 lots in a community called Santan Heights, and we closed all of them within the next 10 months, and we were really off and running. In 2011, we moved into the Tampa market, so we further expanded our operations outside the state of Texas. And in 2013, we became a publicly traded home builder. In fact, in November of 2013. And always an interesting note, the same day that we went public, another company went public, a company called Twitter. And what's interesting to note that we IPO'd at a share price of $11. Most recently, we were trading in the mid 40 range. So our stock has gone up 4 times its value. Twitter has seen about a 10 or a 20% decline since they IPO'd on the same day. So just kind of an interesting fact. 2013, in 2014, we acquired our first builder in the Charlotte market. Oakmont Homes, and that was our entrance into the Carolinas, both North and South Carolina. 2015, we bought another builder, really the assets of a builder in Denver market called Jack Fisher Homes, and that was our entrance into that market. 2016, we entered the Seattle market. That's where I'm from. We opened that market in 2016 with our first closings. And in 2017, we had our first closings in Portland. We'll have our first closings in Minnesota, and by 2018, you'll see our first closings in California. So next page, we're looking at year-over-year growth. I make 2 points here. So I always start by saying, looking at the 2010 to 2015 time frame, a couple things I want to note. First of all, back in 2010, we closed 439 homes. We were a very small company in terms of a national presence. But what's cool is we did that on 3 communities. So we sold and closed almost 150 homes per community per year in 2010. Between 2010 and 2015, we grew the business at a rate of more than 40% year-over-year growth. Between 2015 and 2016, we still grew the business at a very healthy clip of more than 20%. And this year, we're projecting closings to be north of 4,700 closings. So still a very healthy 15+%. Moving on to the next page. So the nice part about being publicly traded is all of our financial information is available to the public. And this graph that you see here, or these 2 graphs, were done by Wells Fargo Securities at the end of 2016. It looks at absorption per community per month. So how many homes do we close per month per community, as well as gross margin. And typically in the industry, you either close a lot of homes per month, but do it at the expense of margin, or you sell at a very high margin, but you don't close a lot of homes per month per community. Now you can see LGI Homes for the year of 2016 led in both closings per month per community, as well as gross margin, something that's never been done by any other builder in the industry. Now we're going on to this page. So as we've talked about, we're one of the nation's fastest growing home builders. We were founded in 2003, as I mentioned. We're traded on the NASDAQ, and we're traded under the ticker symbol LGI Homes. I'm sorry, LGIH. All right, guys, I'm going to cut this off. I'm going to do part 2. I need to go do my shots. So I'll pick up where I left off and do part 2.